And the next transaction. Now, let us recap on the buyback of shares. The first step, you calculate the average share price, which is the value of shares issued divided by the number of shares issued. After you have calculated that, you reduce the ordinary share capital by the average share price multiplied by the number of shares repurchased, and you reduce the retained income by the difference between the purchase price and the average share price multiplied by the number of shares being repurchased or being bought back. I think if you can follow these steps, you will never go wrong. 5. The next transaction. The directors declared a final dividend of 60 cents per share. This dividend is applicable to all shareholders, including new shares issued and repurchased shares. That is very important. This says all the shares are eligible to participate in the distribution of profits, which means how many shares do we have in issue? We said at the beginning of the year, we had 500,000. From last year, we had 500,000. And then we issued 200,000. All in all, we have 700,000 shares. Even though we sold this 60,000, this instruction says to us, we must not subtract the 60,000. They say the 60,000 also benefit from the share distribution. Therefore, you have to use the amount of the 700,000. Therefore, we are going to say 700,000 multiplied by 60 cents. And then you have 700,000 multiplied by 60 cents. It gives you 420,000. This is a final dividend. But this is declared. It is not paid. It is declared. It is not paid. Therefore, what do? You are going to make an entry in these two accounts. We are going to go to our ordinary share dividends, and we say shareholders, we debit it with shareholders for dividends. We calculated that amount as 420,000. 420,000. And credit shareholders for dividends with ordinary share dividends. 420,000. Right. I think here we forgot to make the two entries. We have debited ordinary share capital with bank. We have debited ordinary share capital with bank. Therefore, we must credit bank with ordinary share capital. We must credit bank with ordinary share capital, 340,000. Here, we credited retained income with bank, 96,000. Therefore, we must credit bank with retained income, 96,000. 96,000. Right. I'm sure you are following up to so far. And the last entry or transaction, they say the net income tax before tax for the year was calculated at 1,700,000. Where are we going to record that? We are going to record that in our appropriation account. We are going to say profit and loss. Profit and loss amount 1,700,000. Okay? The first thing that we are going to pay from this profit and loss is the income tax is based on your profit. The income tax for the year would be debited to the appropriation account. Income tax. Now, what did they say to us? They said to us, income tax is calculated at 30% of the net profit. Income tax is calculated at 30% of the net profit. What do you do now? You say 1,700,000 multiply by 30 over 100. This is a very easy calculation. 1,700,000 multiply by 30%. That gives you 510,000. 510,000. They have not asked us to prepare the income tax account. Therefore, income tax, you will have 510,000. But what is important is that you must know that that amount of income tax would increase our tax liability. Therefore, SARS will be debited with income tax, 510,000. Right. And now we are done with the recording. Now we must close off the accounts that needs to be closed off and balance those that needs to be balanced. But the first account that I'm going to close off, I'm going to close off my ordinary share dividends. Remember, the bank shows your interim dividends and shareholders for dividends shows your final dividend. And the total of the two will give you your total dividends. The total dividends here would be 140,000 plus 420,000 gives you 560,000. And then we close that account to the appropriation account, 560,000. I open this account so that you should see where the amount of ordinary share dividends come from. In our appropriation, then you debit it with ordinary share dividend, and the amount was 560,000. Right. Then what we need to do is to close the appropriation account. How are we going to do that? Which side is bigger between the two sides? I think the profit and loss side is bigger. Then we have 1,700,000 on the credit side. You can write it here. Let me write it here. 1,700,000. And I also bring it here, 1,700,000. And then we say 1,700,000 minus the income tax of 510,000 minus ordinary share dividends of 560,000. It gives me 630,000, which is transferred to the retained income. The 630,000 is the profit that is left behind after subtracting income tax and ordinary share dividends. And then I go to my retained income. Here is my retained income. Then I bring in on June 30, end of the year, the amount that comes from the appropriation. And then we said from the appropriation we brought how much? 630,000. And there you are. 630,000. And what must we do now? Now we must simply balance our retained income. We are going to say 630,000 plus 950,000. 630 plus 950,000 gives you 1,580,000, which we also bring on the debit side to 1,580,000. In order to get the balance carried down, we'll say 1,580,000 minus 96,000 give us a balance brought down, balance carried down of 1,484,000, which will be on July 1. Your balance brought down of 1,484,000. You do the same. You balance ordinary share capital with the same. The credit side is bigger than the debit side. We have already established that the total of the credit side is 3,780,000. Then you bring it on the debit side, 3,780,000, and then from that we minus the 324,000. 3,780,000 minus 324,000. It gives us 3,456,000. That is your balance carried down, and on July 1, your balance brought down would be the same amount of 3,456,000.